Sometimes prices doesn't move together, and that is where profit hides. So if you want to know why I made this statement, you need to watch this video to the end. Today is Tuesday, the March 17th, 2026, and this was the trade I took yesterday, the Monday on the 16th of March. So I couldn't close the trade yesterday. I held on to the trade up to today, being Tuesday, and as you can see the result so far. So day 14th. Now when I mean day 14, I mean trading day 14, right? It's not that I started the challenge 14 days ago. It means today this trade is the 14th trade, right? So far we've made over 400% of our starting balance, right? If you've been following the challenge, you will see that we started with a $100 account, and now we have made over 400% of our starting balance. So back to my statement, prices doesn't always move together, and that is where profit hides. So I'll be giving an illustration of what I mean by that. Prices doesn't always move together, and that is where we as best trader take advantage of the opportunity in the market. Stay with me. So last week I gave an illustration about best trading, and I was talking about how to apply trading in everyday life, or understanding trading, not just candlestick going up or candlestick coming down, but to really understand best trading or trading and the real life application of it, and that is where you become profitable. Strategy is not enough. Knowing when price will go up or down isn't enough reason why you should be putting your money on a currency or a crypto asset, but having an in-depth knowledge of why they move the way they move. So in this example, I'll be giving an analogy of oil prices and gasoline prices, right? So in this example, you can see we have 3 weeks, and we have oil prices and we have gasoline price. So everyone knows that crude oil, right, and gasoline, they tends to move in relationship with one another. What I mean is, they tends to move together, right? They tends to move in the same fashion. So if most especially, they tends to move in positive correlation. What I mean is, if oil or crude oil price increases, right? If the price of crude oil increase, then the price of gasoline will also increase. Now let's say, for example, in the week 1 we have a 30% increase in oil, right? And then we have a 33% increase in gasoline. Then we have in week 2 a 50% increase from the previous week, which is 30%. That is about 20% increase in price of oil. Then we have a 51.5% increase in gasoline price. So that's it. That's week 1 and week 2. We say the two prices, which is the prices of the two assets, oil and gasoline, are positive correlation. They are moving in the same direction. Then let's say some unexpected event occur, just like we have the war currently going on, and the price of oil drastically increased to 100%, right? 100% in the price of oil. So what to expect? You expect that oil will be increased. So let's say these are figures, right? These are figures. Oil is now 100.28%, and then gasoline price, instead of gasoline price to move in sync with oil price increase, but you see that the gasoline price remains as 55.1%. So this is where our profit lies. This is where we as traders, we as best traders or statistical traders, we take advantage, we monitor keenly to take advantage and make profit from the market. So we say that oil price is overperformed and gasoline price is underperformed. Generally, these are two assets that usually will move together every time. If one is going up, the other one will go up with it in the same percentage, but suddenly an unexpected happens and the prices of one increased more than the other. So as best trader, we are taking advantage of it. So we are going to take action. The action plan we are taking is to sell the overperformer, right, and buy the underperformer. So the reason why we are buying the the reason why we are selling the overperformer is because the overperform asset has already increased, right? It has already increased, and the underperform asset, since both of them are supposed to be moving in the same direction with the same percentage increase, so we expect that the underperform will meet up, right? We catch up with the overperformed asset. So we buy the underperformed asset, which in this case the gasoline price, and we sell the overperformed asset, which is the oil price. Now you want to understand that the oil price may pull back or remain the same percentage, which is 100%. It can remain at the same 100% while the gasoline price will catch up with it. That is the first scenario. So the second scenario that can happen is the crude oil, which is oil price, pulling back, right? Pulling back to the 55% or let's say 60% of the gasoline price. So you see that in this case, as traders, we have made profit from this price increase or pullback. So I believe this is not hard to understand, but the general idea of best trading is that these two commodities, these two assets, these two forex pairs, these two crypto pairs must have a relationship, positive or negative. They have to be moving in the same time over a long period of time. Correlation is not enough. Cointegration is the key to profitability in best trading. So I believe you now understand why best trading works. So it's not about that price is going up, we are buying, or price is coming down, we are selling, but strategically prepared to take advantage of two assets that usually move together, but there is a short disturbance or interference that caused them not to be moving together, and we are taking advantage of that window of opportunity. So that is it, guys. So I'll be closing this trade anytime from now. It has already satisfied my criteria to close the trade. So if you have not yet subscribed to this channel, do well to subscribe. If you want to learn more or know more about this method of trading, you can always reach out to me. So these are the books I recommend you to read if you are starting out trading, or you want to start best trading. You can read these books. So I'll be talking to you tomorrow. Until then, bye.